Okay, let's check the chart of PUDC.OB. So this is an OTCBB traded stock, and the chart tells you that. Look at these spikes and very low volume. Only recently we had heavy volume here, but the trend, the long-term trend, is still descending, as you can see. So technically this is not a pretty picture here. And over the short term we had this big bull run here. This is what, 150% rally perhaps from here to there, but lately, over the past month or so, the stock has been trading sideways, and this looks like a top, to me at least. Volume is drying, and the stock, well, the recent fundamental developments weren't that positive either. Well, let's move on to the valuation model. We have here the initial share price, $2.23. The initial share count is 95.7 million shares, and the share count has been growing a lot. It was just 80 million shares in Q4 2006, I believe. Where have I seen this? Just a second. Well, I've been checking here these SEC forms, and no, it was in Q3 2006. There were just 80 million shares, and now 95 million. So I consider a 15% dilution factor. These are OTCBB companies and Chinese companies. Well, not all of them, of course, but OTCBB is very dangerous, as you probably know. Final share count, given this dilution rate, will be 145 million shares in 2009. And over the past 4 quarters we had $137 million in revenues. I expect these revenues to grow about 15% a year going forward. There was very strong growth in 2006, but in 2007 first quarter numbers were below the Q3 and Q4 numbers, so I expect just 15% going forward, and this gives me a final revenue number of 208 million. Initial net profit margin, this is the net profit margin I had in Q1 2007 of 10.2%, and my final net profit margin estimate is 10%, but this could be more because this was a seasonally weak period, Q1. But I'm not sure this, what is this business? I know it, but this coal business, industrial metals and minerals, can support a much higher net profit margin. Look here on its competitors. Sorry, just a second. Okay, let me try to show you. Competitors have about operating margins of around 10% to or below that, so the average is 11.27%, so I find it hard to believe this stock can have 15 or 20% net profit margin. So 10%. Final net income estimate, this is calculated by the model, these dark yellow lines. This company will earn $20.8 million in 2009, and because of dilution, this 15% dilution, this gives me just an earnings per share estimate of just 14 cents. And with again this, where is it, this industrial metals and minerals industry average price to earnings ratio of 20.75, that's my estimate here, 20.75, I get a final estimated share price of $2.97, and this means the stock will rise about 10% a year going forward, and this is not enough for me. I look for at least 16%, so the stock is not attractive. It will probably trade at the market average, but I'm not sure, because with the stock this high in historical terms. Wait a second. Well, after this rally, I'm very afraid that they've diluted shareholders' value a lot here. They clearly are not working to build shareholder value. So I would avoid this stock. But good luck if you own it. Thanks.